The very first person we're going to let take over is Dr. Jane Thomason. She will be speaking a little bit today about just to introduce some of the ideas in blockchain in general. So hopefully she'll be able to contextualize a little bit about some of the ideas that we're going to be seeing over the next hour and a half. And then that way we won't have to be reinventing the wheel every time a speaker comes in. So I'm going to, if you give me a moment, let Dr. Thomason. It seems like we might be having a little audio problem. Sorry, let me see if I can sort this out right now. My apologies. So, yeah, Dr. Thomason has had decades of experience, by the way, in just blockchain and fintech and startups. So we're also going to hear her, by the way, speaking next week. All right, let me see if it works this time around. Having a little bit of technical issues. Okay.
Welcome to an introduction to blockchain. I'm Jane Thomason. What is a blockchain? Next slide, please. A blockchain is quite simply a ledger of facts replicated across multiple computers assembled in a peer-to-peer network. Those facts can be anything from monetary transactions to content signature. Members of the network are anonymous individuals called nodes, and all communication inside the network takes advantage of cryptography to securely identify the sender and the receiver. And when a node wants to add a fact to the ledger, a consensus forms in the network to determine where this fact should appear in the ledger. This consensus is called a block. Next slide. One of the reasons that blockchains are getting a lot of attention is that they have several key features which are going to enable them to practically add value to many, many sectors. So one is it's almost immediate. They can deliver faster services. It's highly secure because it's a decentralized network. Therefore, there's no central server to hack. It's efficient and it's transparent because once the block's on the chain, it's time-stamped and it can't be removed. And it eliminates the need for trusted third parties. Next slide, please. So just talking about some of the words that you've probably heard around blockchain, you will have heard of a whole lot of platforms, and you will have possibly heard of Bitcoin, which is the most famous, which is a peer-to-peer distributed cryptocurrency. Ethereum, which is a platform which hosts a number of different applications, including Ether, which is another cryptocurrency. Hyperledger, which is a private blockchain, which is being used a lot by business, and then Monax, which is another. But having said that, there would be at least 50 different blockchains that are being used at the moment. Let's move on to the next slide because there's a concept that's really important in blockchains for you to understand it in terms of their application in a number of different industries. So if you think of a contract in our traditional terms, it's a promise that the signing parties agree to make it legally enforceable. Next slide. However, smart contracts are not that. A smart contract is a promise that the signing parties agree to make it technically enforceable. So in effect, it removes the need for a judge or any authority because it's basically a piece of self-enforcing code that can automate steps in a chain. So for example, if X happens, then Y takes place. So let's say, for example, in a certain process you have met the requirements of to trigger a payment. So let's say Ledger, which is an interesting one, which really rapidly improves the payment cycle for farmers in agriculture. The minute the farmer delivers the grain and the grain is weighed and certified, a smart contract automates an immediate payment. So there's no invoicing, there's no 7-day payment terms. The smart contract enforces immediately. So that's a really important concept, which is relevant throughout many of the use cases that we'll be talking about. So let's just have a look at what some of the key use cases of blockchain are. So next slide, please. So most people hear about blockchain and they think about Bitcoin and cryptocurrencies. And indeed, this is a very important application of blockchain, but it is absolutely not the only one. So speculative cryptocurrencies, we'll talk a little bit about that. They are built on a blockchain, but there are many, many other use cases that we have that are going to really benefit from blockchains and already are. So two that we'd be thinking about right now, because we've had the COVID pandemic, is supply chain, because supply chains have been fractured and there's been problems with provenance of things like personal protective equipment. Health and health records, provenance not just of PPE equipment, but of foods and of wines and of diamonds. There are projects for those. Transportation, voting, energy, taxation, welfare payments, government engagement with citizens, land titles, registries, industry creation. So blockchain can provide a foundational layer for many, many types of services that we rely on in our day-to-day lives. So let me run you through with the next slide some of the non-financial use cases, because probably one of the fastest moving areas outside, again, of cryptocurrencies is in financial use cases, and we'll come to them. But if we look at secure digital content, document storage delivery, digital identity, we spoke about smart contracts, authentication and notarization, marketplace, real estate, reviews and endorsements, gold and silver, diamonds, network infrastructure and APIs, application development, and blockchain in IoT. And then underneath each of those icons are companies that you can look up who are working in these areas. So having a look at the financial use cases, currency exchange and remittances are a very important and growing use, particularly in emerging economies. Peer-to-peer transfers, because it allows direct peer-to-peer transfers without any middleman. Ride sharing, trading platforms, gaming, and data storage. So let's move on and just talk about a few of these use cases. And I apologize if I'm going fast, but this is a big overview. So let's just start with the Bitcoin and cryptocurrencies. So this actually started as a response to the global financial crisis, and it was very much a reaction to that. It was an anti-government, anti-bank movement, and so the cryptographers created this digital cryptocurrency that was decentralized and operated in a peer-to-peer network. So it didn't need governments and it didn't need banks. And so there was a very kind of libertarian viewpoint and philosophy that went along with early proponents of Bitcoin. And then if you have a look, this has obviously grown from Bitcoin to many other cryptocurrencies. And I've just got the top 5 on the next slide if you have a look. It's very volatile at the moment. The market cap's actually gone down because the value of a lot of the cryptocurrencies have gone down. But you'll see that you've got Bitcoin, Ethereum, Tether, etc., you know, the top 5, but there are some thousands of cryptocurrencies that are being traded on exchanges at the moment, and you can have a look at what they are. The other phenomenon, if you move to the next slide, which was a very interesting part of the history of blockchain, was the phenomenon of initial coin offerings. And this was something that was created to allow startups to raise money through cryptocurrency, through offering investments in their project through something called an initial coin offering. And this was raising funds by creating their own cryptocurrency. That cryptocurrency would be offered at a discounted rate before it hit the exchanges, and the value is created and settled by a network of participants rather than a central authority, and startups can open source or put their project under a not-for-profit foundation and raise money. Now, what in fact happened, and some of you will know, is that absolutely incredible amounts of money were raised in 2017, 2018, up to, next page please, up to actually $4 billion, which was for EOS by Block 1, but you'll see some of the other very large amounts of money that were raised, 258 million, 257 million, 232 million. So this was all the rage until the US SEC, the regulator, regulated that these were in fact securities and came under US securities law, which meant that this somewhat wild, unfettered raising of large amounts of money by people who sometimes didn't even have a project. They just had a white paper and they promoted that through conferences all around the world, started to become regulated, and you see very few ICOs anymore. People are still looking at ways of raising money using the same principles like security token offerings and so forth, but we don't see the ICOs. But, you know, the early days of blockchain was exciting. There was a lot of money around and people largely associated with cryptocurrencies. But moving on now, what we're seeing is, if I would say, a maturing of the industry, with people working on real and serious projects, both with government and in areas like finance and supply chain, and absolutely with COVID healthcare. So just running through a few use cases here. The first one is an Australian startup called Civic Ledger that works with government and essentially works on putting government registries on the blockchain. But what they also do, which is really interesting and I think will become increasingly important in times of water scarcity, is they have a water trading platform that allows countries and areas that suffer from water scarcity to be able to track and monitor the use of water, and Australia is one of those countries. Another one, if we'll go down, is accounting, and I think that this is you know, a really interesting one, because almost my screen seems to only have me on it now. So I'm going to keep on talking, hoping that we're going to find the screen again. So the use case for accounting is standardization will allow automatic verification of data in financial statements. Cost and time of audits will decrease. Fully automated audits may be possible with absolutely improved efficiency in transactional accounting. It will replace bookkeeping with reconciliation work, and it will mean profound changes for auditors because the lower levels will be automated, and auditors will need to make a strategic assessment and be able to review the code and the smart contracts and so forth. So accounting will be profoundly changed. Similarly, if you move on to the next slide, invoicing. I talked to you about agri-digital, and this is one where you're automating the invoice payment using a smart contract the minute that the transaction is confirmed that the payment can be made. And one of the ones that I love, because I travel a lot, is thinking about travel insurance for a delayed or cancelled plane. So you've got on the plane, you're sitting in the seat on the tarmac, and the captain announces that due to a technical fault, this flight will be cancelled. The minute that that's notified, and even before you get off the plane, your payment of $500 is in your wallet. So that's the speed and possibilities of the automation of things like insurance. So let me move on briefly to what we call the digital blockchain poster child, a small country called Estonia. Some of you may have heard of it. And it is one of the countries that has the highest ease of doing business, because about 15 to 20 years ago, they decided they would go entirely digital. They have a single digital identity for citizens, and all tax reporting and most interactions with government are online. It only takes a few hours to start a company, and you too can become an e-resident of Estonia in about 20 minutes and start doing business in Estonia. It's a fascinating use case. It's built on blockchain. You really should have a look at it. So let's look at another one, which is around procurement. And I want to emphasize that the way that I see it is that blockchain will be a kind of underpinning of many, many applications, and it will generally be used in concert with other digital technologies like AI. So this was a really interesting example for procurement, which was done with the US government department in major procurement, where you have major financial assessments of tenderers. And what they found using blockchain and AI was they were able to slash the contract award time from 100 days to 10 days. So it really can produce significant efficiencies in terms of government services. So my last comment, I'd like to leave you with a thought about the possibilities that blockchain offers to the future connected organisation. So it provides secure permissioned access to data. It's fully auditable. It's tamper-proof because it's decentralised. There's no central database ownership because it's distributed. There's easy access for data sharing. It's interoperable with a single digital ID, and you can onboard additional jurisdictions very easily. And there's this whole paperless layer for digital transactions. So you can almost think of any industry that you like and think about how this is going to add speed, transparency, efficiency to the way that organisations work. And next week, I'm going to be talking to you about some of the applications where I believe that it's going to be a significant benefit to humanity, for social transformation, for the achievement of the Sustainable Development Goals. So just leave you with this slide, which is thinking about all of the changes that are coming upon us with blockchain. If anything, the COVID pandemic has absolutely accelerated this. Digital companies and blockchain companies have pivoted, and they're already providing their platforms in so many different ways, whether it's healthcare or data analytics or provenance or supply chain or remote care for people who are in isolation. The COVID pandemic has had the unexpected consequence of accelerating the digital transformation. So thank you very much for listening, and I look forward to speaking to you at more length and live next week.